Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the risk metric. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. That sale is ending in just a couple of days, so make sure you guys check it out, lock in lower rate. Let's go ahead and jump in. So, the risk metric, which is something I talk about on the channel every month or two, is actually how I navigate Bitcoin. And I know I talk a lot about a lot of different things on the channel. We talk about, Bitcoin in relation to its bull market support band. We talk about, the beauty of mathematics videos. We talk about the macro side of things. We talk about a lot of stuff. But it can be easy to sort of lose yourself and lose the strategy because you're focusing on so many things, even Bitcoin dominance, right? And so what I do is I buy Bitcoin when it's below a certain risk level, and I sell it when it's above a certain risk level. And I don't make it any more complicated than that. Okay? So the way it works is that 0 is low risk, 1 is high risk. 0 corresponds to dark blue, 1 corresponds to dark red. So if you were to isolate, say, 0 to 0.2 and 0.8 to 1, if all you ever did, right, if all you ever did was buy Bitcoin anytime it goes below 0.2 risk and sell it anytime it goes above 0.8, you're doing pretty well. Okay, now this risk metric is something that I developed back in 2019. And so far, it has stood the test of time. Right now, the Bitcoin risk is 0.484. So it's actually in the lower half of the risk levels. It's just below that 0.5 risk level. Do you guys remember back in early 2021 when most people were screaming for 300K Bitcoin? And I came out back then with the risk metric chart. I mean, I'd already developed it before that, but I posted many videos about it back in early 2021. And I said, guys, as much as I know everyone wants 300K to happen, we're unfortunately already in the 0.91 risk span. And it's not about what I want, because of course, who wouldn't want Bitcoin to go up, right? It's not about what I want. It's about what I think will happen. Okay? And so back then, I said, all right, guys, we're probably going to get a summer lull. And we did. And by selling Bitcoin into those risk levels up there, I was able to accumulate back as it went to that 0.3 to 0.4 risk level and 0.4 to 0.5, right? So you can see that allowed me to get back in to parts of that position. I didn't accumulate everything back because normally once you go to the 0.9 to 1 risk band, you do have to be careful. But that in the last cycle is where I offloaded most of the positions that I had accumulated back over here in late 2018 and 2019 and 2020. It was right there. Okay. And then we had a second top. And unfortunately, this risk metric did not do as good of a job of catching the second top. And I struggled a lot with that because, for me, all I wanted to do was stick with the risk metric. And I sold a lot into the first one. And it took me a couple of months here, right? Really not until early 2022 to be on board with the idea that we were in fact going into a bear market, right? And then I put out a video, I think in January or February 2022 saying, tips for navigating the bear market. Altcoins are too risky, right? Bitcoin dominance is going to go up for several years, etc. Okay. But there was one thing a positive thing that I think came out of that, and that is adding on the social risk. Because the social risk is something that I wasn't following back then, but you can see that the social risk went back up to the 0.91 risk band in 2021. So it was like the retail interest was back at the highest risk band, but price was not durably breaking out. So going back to the risk metric by itself, I think it's great for really identifying that first parabolic rally that gets you to that 0.8 to 0.9 or 0.9 to 1 wristband. In 2013, you had 2 of those moves. In 2017 and 2011, only 1. Now, what's interesting is that, and I've said this many times before, and actually 2021 is a great example of this, because in late 2021, Bitcoin risk did not go back up to the higher risk bands. So there's an important lesson in there, and really it comes from what happened in 2019. So the idea, generally speaking, is to buy up into a specific risk level, and then when it gets above that, to just not do anything, right? You know, I've toyed with that idea before, where let's say you buy up to 0.5 risk or 0.4 risk or 0.6, whatever your risk tolerance is, and then you sell above it, then you're just buying and selling every single day if it keeps flip-flopping around that risk level, okay? So what I think is a better strategy, not financial advice, right, but what I think is a better strategy is to buy up to a certain risk level and then come up with a couple of risk bands where maybe 1 or 2 where you don't really do anything, right? So for instance, it could involve buying Bitcoin up to 0.4 risk, doing nothing between 0.4 and 0.6, and then above 0.6 taking some profits. Back in 2019, the Bitcoin risk went to 0.6 to 0.7. And I remember offloading a little bit there. Not everything, right? But a little bit. And thinking to myself, at least by offloading some, if the price does crash, because we actually had an inverted yield curve back then too, if the price does crash after yield curve on inversion, then at least I took something off the table. But I didn't want to sell everything because it seemed like Bitcoin could eventually go much higher, especially in the post-halving year. And so what I did was I developed this dynamic DCA strategy, where essentially what you do is, rather than offload everything the minute you want to sell, you do it dynamically. And so what that means, and this is the same risk model just on the secondary y-axis, what it meant was, you know, when it went above 0.5 risk, selling 1/15 of my Bitcoin. And then when it went above 0.6 risk, selling 2/15 of my Bitcoin, right? So then by the time it had gone through these 2 wristbands right here, I had sold collectively 3/15 of my Bitcoin, or 1/5 of my Bitcoin position. Now, wasn't a lot, right? But it was enough to make me feel somewhat better when Bitcoin was trading back at $3,800, you know, 9 months later, right? I was able to take that off the table and put it back into Bitcoin, right? Reinvest it as that recession arrived. And earlier this year, I said, look, it's kind of the same thing, where if this is like 2019, what happens if we're just getting sort of one of these earlier rallies that go up the wristbands, but they don't go all the way up the wristbands? Because back then, you know, when the Bitcoin risk was 0.73, coincidentally right around 73K, right? I think a lot of people, they were calling for 100K by the halving, or 100K in the summer. And of course, they just keep kicking the can down the road, right? And the point is like, I didn't know where it was going to stop exactly. I mean, we looked at the charts and we said 73K could provide some resistance because, you know, if you look at USDT dominance, it was hitting its long-term trend line. Gold was breaking out. It was hitting the trend line on the natural log of the price divided by the 20-week SMA. So it seemed like we could get a rejection, but at the end of the day, no one knows, right? But it doesn't matter. I just looked at this and I said, all right, well, if it is like 2019 and I skim some profits and we go into, you know, an uninverted yield curve and we have to deal with the fallout of that, then at least I took something off the table if it follows 2019. But the reason I don't take everything off the table is because no one knows what the future holds, right? And, you know, what happens if something like this happens next year, right? Where it goes up to the higher risk bands, which is always a possibility. I mean, no one really knows. It's possible we could just get a recession and it doesn't happen, but it's also possible that we see something like what happened last time, where you get a big drop and then we get a recovery right out of it. That's always a possibility as well. So when I look at this, I think to myself, all right, well, when I looked at it back then, I was like, dynamic DCA is the way, in my opinion, because no one ever knows how high the rally will go. No one ever knows what risk tolerance or risk band Bitcoin will make it to before getting a larger correction. Like in 2019, you could have thought it was going to go up to the 0.9 to 1 risk band, but it didn't. But if you took something off the table, would have worked out about a year later pretty well. In 2021, if you started selling here in November, December, let's say you started selling in December, when Bitcoin's price was in that parabolic phase, if you had sold everything thinking it was going to top out where it topped out in 2019, well, that would have been a terrible mistake, because Bitcoin went 3 times higher than that, more than 3 times higher than that. So that's why I think dynamic DCA is the way. So that when it goes into some of the elevated risk levels, like, 0.6, 0.7, it warrants taking something off the table. But does it make sense to sell everything when history shows that eventually it could go to the 0.9 to 1 risk band? Probably not. So that way, I'm prepared no matter what type of rally it is. So if it's a 2019 style rally, which is what I thought it was, and it seems like that's been proven correct, then you take something off the table. If, on the other hand, it's a 2021 style rally, or a 2017 or a 2013 style rally, and you are taking profits here, well, at least you didn't sell everything, so that in case it keeps going up, you have more to sell. So that's why, for me, above 0.6 risk is where I starting to lighten the bags a little bit, right? Above 0.6. So last cycle, I did it above 0.5. I sort of, I changed my range. So last cycle, I would buy below 0.5 risk and then sell above 0.5 risk, but maybe like leave like a gray region between like 0.5 to 0.55 risk or something like that. But this cycle, I've only sold above 0.6 risk, but I've only bought below 0.4, right? So essentially when it's between 0.4 to 0.6, I'm not really doing a whole lot. But below 0.4, I DCA in. Above 0.6, I DCA out. Slowly at first, right? So if it goes below 0.4, a little bit. If it goes above 0.6, a little bit out. But the higher it goes, the more I sell. The lower it goes, the more I buy. And that's kind of the thing. I think that's the way you have to, that I have to navigate crypto is I feel like I'll drive myself crazy trying to figure out what the price is going to do, whether it's going to get rejected by the bull market support button, whether it's going to hold support, whether it's going to follow what it did last cycle after ETH Bitcoin broke down, or if it's going to do what it did last cycle after the yield curve uninverted, and drive yourself insane, thinking about all the possibilities. So I just stick to this one number. Well, below a certain risk level, I DCA in the market. Above a certain risk level, I DCA out. And so, on ITC Premium, I published my buys of Bitcoin in late 2022. And that was the point. I didn't know. I didn't know where the bottom was, just like I don't know where the tops are. But I have a plan regardless. And so I published my buys between 15K and 21K. They're all, receipts are still there in ITC Premium for anyone who cares to take a look. They're all there. And then above some higher risk levels, scaling out slightly in case you get a 2019 style pullback, which is what we've gotten. What's interesting is that every single time Bitcoin has gone to the 0.7 to 0.8 risk band, it typically gets that pullback to the 0.4 to 0.5 risk band, which is where we are right now. And I said this back in March and April. I said, look, guys, within half a year, within a few months, we're probably going to be back at some of these lower risk levels. In fact, usually after going to the 0.7 to 0.8 risk band, Bitcoin goes to the 0.3 to 0.4 risk band. You see? Even in 2013, it went to the 0.3 to 0.4 risk band. So these patterns that seem like they're impossible to play out, like if you rewind the clock back to March and April, there was almost no convincing people that this could possibly happen, right? That Bitcoin could possibly fall back below 60K. And now you fast forward the clock and you're like, oh, maybe there is something to, the UST dominance and Bitcoin dominance and the US and the gold breaking out stuff that we talked about. And even the Bitcoin risk metric, which said, hey guys, the market is kind of overheated. So this is what I use, right? This is what I use to navigate it. And, I've met people that do all sorts of things. I've met people that will legitimately buy all the way up to 0.9 risk and then try to sell everything anytime it goes above 0.9. Which, to be honest, if you had strong conviction in that, it's worked out pretty well. Now, you might say, well, this is all fitted after the fact. It's not, actually. It was done in 2019, and it got the 2021 top pretty close, right? Around 58K is where it said to get out back in 2021. Now, of course, price did go a bit higher than that, but if you were accumulating Bitcoin at 3K and 4K, and then you sold it all of it at 58, 59K, I don't really think you cared when it was back at 15K a couple of years later. So that's an important thing. But history shows it doesn't always go to that risk level. Like in 2011, it didn't make it there. So I would say if you're going to go with that strategy, maybe consider the 0.8 to 1 wristbands, right? That way you're a little bit more likely to hit it. You'll notice that this cycle, it hasn't actually hit that wristband. So that's why I go back and I say again and again and again that I think that the rally we just had is more similar to a 2019 style quantitative tightening, high interest rate environment rally where you're not seeing alt season, where it's just a more or less a Bitcoin only rally. And those that convert Bitcoin to altcoins before the Fed pivots are usually disappointed because the altcoins keep on bleeding back to Bitcoin. That's exactly what happened in 2019, even a couple of months after rate cuts began, right? Even about a month and a half after the first rate cut, Bitcoin dominance still went up. So I think that is what has been going on. And the reason that the market is struggling to durably move higher right now is because there's still a lot of uncertainty, right? I mean, there's still a lot of uncertainty as to whether the Fed has gone too far and if they had, kind of like 2019. But about half a year after that, the market started to pick back up, and then we got a recession. So we'll see what happens here with Bitcoin, but I just want people to remember that I talk about a lot of stuff on the channel, but as it relates to Bitcoin, I just stick to the risk metric. Below a certain risk level, I buy. Last cycle, it was 0.5 risk. Above a certain risk level, I sell. This cycle is 0.6. It just depends on what your own risk tolerance is. And I know people that only buy below 0.2 risk and they only sell above 0.8. Honestly, if you got a lot of other stuff going on in your life, that might not be the worst strategy. Just ignore everything else, right? Imagine buying in December 2018 and just watching the price rally 350%, which is exactly what it just did, and then watching it drop 72% and then watching it go back up again. It's not the worst strategy, right? Practically, I don't think most people here are going to follow that, because if you follow that and you're tuning into the cryptoverse every single day, then you're essentially doing nothing for like 95% of the time, which, funny enough, is probably the best way to be successful, is to do nothing for most of the time. Sell seldomly, buy seldomly, and everything else, just watch it go. Most people, practically speaking, though, are going to be DCAing at least up to 0.3 to 0.4 risk, right? Because when you do that, it gives you plenty of time to really get into the market, right? Up to 0.3 to 0.4 risk. Now, there is still the chance that Bitcoin could go below 0.4 risk, because, again, historically, whenever it goes above 0.7, which is what it did over here, it has gone to the 0.3 risk level, within 6 months or so. So there is a possibility that we could see that happen. I imagine it got pretty close when it wicked down to 49K, at the beginning of August. But because it was just a wick, we don't even have it on here because we just look at daily closes, but you can imagine. So this is what I use. It's not perfect. It's not. It's not going to tell you, the 2019 top exactly. It's not going to tell you the 2024 top exactly. What it will do is it will say, hey, yes, it's a halving year. Yes, everyone's, going crazy right now over Bitcoin. But guess what? It's similar to 2019 in terms of market conditions, and the market's pretty heated at 73K. So as I said back then, what if the market just cools off for 6 to 9 months, which is exactly what it's done. And now we're back at 58 to 59K. So this is how I navigate crypto. This is how I navigate Bitcoin. And I just wanted to put this video out, remind people, because it's easy to forget. It's easy when I'm talking about the charts to be like, oh, Ben's buying or Ben's selling because he thinks this or he thinks that. No, I just stick to this number. It's no more complicated than that. And I have no plans to make it more complicated than that. And I just want people to know that I think that's the better way to navigate Bitcoin, is to come up with a risk metric. It doesn't have to be this one. I mean, it could just be anything, right? But I think the issue is that people don't stick to it. They'll say, oh, well, if Bitcoin drops this amount, then I'll buy. If it goes up there, I'll sell. A lot of people don't stick to that, right? When the market is heated like it was back in March, you couldn't convince anyone because the halving was the following month, right? And that meant 100K was coming. But in 2022, when the risk level was low, it's also hard to convince people. So you have to come up with a plan, stick to it no matter what, and that, I think, is the way to be successful in the cryptoverse. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is in the description below. The sale is going to end in a couple days, so make sure you lock in low rate if you want access to this stuff. We also do have a free tier, so just be aware of that. You can go get the free tier as well. It's going to have a few charts, but obviously not everything. So do check that out. I'll see you guys next time. Bye.